Is now the time to purchase ARM and my buying? Well, we'll take a closer look in today's episode. I'm going to take a closer look at some of the bullish cases, obviously some of the bearish things that I'm seeing with this overall company. And for those that are not familiar, my name is Jose Najarro. I focus so much in the semiconductor market. In the past few days, I've done videos on NVIDIA and Supermicro, some of the semiconductor stocks or stocks that deal in the semiconductor space that are down a nice amount since Friday's sell-off. So if you want me to take a closer look at any other companies, maybe AMD, maybe Intel, maybe other players in the semiconductor space that took a huge hit, let me know in the comments below. But let's get started with ARM Holdings.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so if we take a closer look at ARM Holdings, like I mentioned, down 17% on Friday. But remember, we have to look at the long term of things. Long term of things, the stock is up roughly 26% year to date. And in the past year alone, the stock is up roughly 37%. So obviously, if you bought before this huge peaks that we saw in February, you're still very, very much in the green for ARM. We can see from that peak, ARM is down roughly 41%. And I have done a few videos on ARM when the stock has been above $100. And one of my biggest concerns for it at that price is that I personally thought it was completely overvalued. Now, maybe my answer has changed a little bit. We're going to look at valuation in a bit, but we can see there is a massive sell-off right now. All right, so in today's episode, it's going to be broken down on first, understand a little bit more about ARM, the products. Then we're going to take a closer look at some of the market opportunities that they have and which ones I'm very bullish on, recent commentary, guidance, and expectations from analysts. And finally, we're going to end this topic with valuations. So when we think of ARM, the best place to kind of start off is thinking of an actual technology product. And when you kind of think of that product, it's usually a phone, a laptop, a smartwatch, a car, some form of data center product, or something else. Usually that product, not usually, that product is most likely powered by some form of semiconductor solution. That semiconductor chip is built at a foundry, and those foundries are companies like TSMC, like Intel. But for those companies to build that chip, they need to have a blueprint. They need to have a design. So it's usually chip design companies that create that blueprint so they can finally get manufactured by foundries. And chip design companies are like NVIDIA, like Qualcomm, like Apple, right? So they design their own chips. But to design your own chip, you actually have to use a special type of brain, a special type of instruction set. One of the most popular instruction sets out in the world right now is ARM. And that's where you start ARM. So ARM is such at the bottom of the semiconductor industry. And I feel like this is one reason why many people might not know of ARM, right? Because no one's going to know, hey, what kind of brain is NVIDIA using on this CPU? What kind of brain is Apple or Qualcomm using in this CPU? But we're going to see ARM has a huge market opportunity for them, and there's definitely a lot of reasons to be bullish. And just a quick way that ARM makes money is they have license and royalty fees. So while, example, a company like NVIDIA creates a chip based on ARM brain, NVIDIA is going to pay ARM a form of licensing deal and also a form of royalty deal for those chips being sold. Now, some of the products that they have are mainly CPUs. That's what ARM is really known. They're CPUs, they're Neoverse, they're Cortex, but they also have things like GPU, NPUs, which are really great right now with this AI market, interconnects. They also have software and tools to help kind of develop your overall chip solution and kind of chip ecosystem. And they have a compute subsystem, which is pretty much a great way of saying, hey, look, if you want to, if you're a chip design company, but you don't want to start from scratch, we can give you a lot of this blueprint already done, and you just pay us extra money. And we've seen a lot of companies actually done with the compute subsystem as well. Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode. So I want to take a closer look at the markets that they hit. And there's two markets here that I think are very, very bullish in forms of growth opportunity, in forms of being some form of new market. And then the other two, while I don't believe are going to grow as fast because maybe their products are already pretty big in the space, the amount of chips that go in those products are increasing. So the two markets that I'm very bullish for ARM are cloud compute and automotive. Cloud compute, we're seeing a lot of cloud server providers design their own chips. And usually those chips are ARM based. And we know how much money these cloud server providers spend on building chips. So that could be a nice form of licensing fee that ARM collects as we start to see more big tech players design their own chips. The second one I'm super bullish is the automotive market, right? The automotive, while cars have been here for such a long time, cars are getting smarter. We're getting to autonomous driving, but just smart vehicles in forms of safety doesn't have to be complete self-driving, but all the technology that's being added into cars, you need some form of computational brain, and usually that computational brain is some form of ARM processor. So those are the ones I'm really bullish about, especially within the next 5 years. The two that I'm not too bullish on in forms of market share growing is the mobile. I'm pretty sure mostly everybody in the world has some form of phone right now, and the IoT. A lot of people already have technology on their homes, but technology is improving. The amount of chips that are going to go on your phones are increasing. The amount of chips that are going to go in whatever Internet of Things product is also increasing, especially with AI. And this is exactly how ARM is seeing their revenue opportunity, right? ARM believes that, hey, look, our mobile market, they roughly have 99% of that market share. That is insane, right? This is 2022, so obviously numbers can be a little bit larger right now, but we can see cloud compute, only 10% of market right now. That can grow dramatically. Automotive right now is about 41%. That can continue to grow. So, and those, the cloud compute and the automotive, which they have very low market share, are the ones they expect to have a huge total addressable market compounded annual growth rate increase at double digits. And this is where I believe ARM has huge market opportunity. I mean, especially with AI right now, AI is creating so much opportunities in things like cloud compute, generative AI. We see that NVIDIA, for those that are not familiar, NVIDIA actually uses an ARM brain to design their Grace CPU. And their Grace CPU is going to be one of their biggest products this upcoming year in 2025 when they release the Grace Blackwell 200. Other companies like Ampere are using them to make their own CPUs. And here we can see in the automotive market, AI increasing the amount of computational power. It's being used for things like cruise and for other types of autonomous driving solutions. Here are other examples of maybe AI increasing the amount of chips you might need on your phone and your Internet of Things and smart home products. Some great thing about ARM is all major technology companies are using this, from AMD, NVIDIA, Intel, right? The list goes on and on. If you're a big tech company, if you have some form of chip, you're using ARM one way or another. AMD uses them a lot for some of their embedded processors. Same with Intel. Amazon, as we're going to see, uses them for their own CPU solutions, like we see NVIDIA doing it, we see Microsoft doing it, and now recently Google. So there's a lot of growth opportunity. Apple, all their chips for their phones are ARM-based powered in forms of brain, and same with their laptops as well, as now Apple has created some crazy amount of semiconductor solutions for their products. One great thing about ARM is you might think, hey, Jose, with the royalty revenue, their royalty is probably based off new products. But we can see here 46% of their estimated 2023 revenue is actually coming from products before 2013. So it kind of showcases that, hey, some of these chips that don't need to get updated too much. Obviously, we get so hyped with much advanced chips and AI, but there's a lot of chips that you don't really need to update. And we can see 46% of revenue comes from outdated chips. Not really outdated, but chips you don't really need to update so often. Now, like I mentioned, cloud is probably my biggest market opportunity for ARM. NVIDIA is using it for their Grace Hopper and for their Bluefield DPU. AWS is using, or Amazon using it for Graviton 4 or their Nitro DPU. Microsoft recently announced their Cobalt 100, which is a CPU, so they're also using it for that CPU. And most recently, in Google just announced that they have created their first ARM-based CPU, the Google Axion. And the main reason is they found the rate of CPU improvements has slowed dramatically recently. So this is why I believe a lot of these big tech companies are going to continue to build their own CPUs, and they're most likely going to come in here in the ARM ecosystem, and that's going to be a huge form of royalty revenue or even licensing revenue for ARM technologies. Now, if we take a closer look at expectations, we can see revenue in the trailing 12 months was roughly $3 billion. Now, for the current fiscal year, which is about the next 12 months from now, it's going to go up to about $4 billion. So, what's that? About a 30 to 40% growth rate in the year. And then they expect for the next fiscal year, so about 2 years from now, their revenue is expected to grow to $4.8 billion. So we can see analysts are expecting a nice amount of revenue growth from this company. I might think that, hey, look, the revenue numbers here are a little bit underappreciated. I do believe ARM has the potential of beating all these expectations. But just because I mentioned all those great things about ARM and I believe they're able to beat expectations, would I buy ARM right now? Another great thing about ARM is cash flow from operations in the trailing 12 months positive, almost $1 billion. No long-term debt to its name as its most recent quarterly filing. And also this company has roughly $2.4 billion in cash and short-term investments. So this isn't a company that's going to go under. It's a company that has a great market opportunity. It's a company that big tech players are using. It's a company that can continue to grow and has, in my opinion, has the ability to beat expectations. So Jose, you must be buying ARM stock right now. While all those things are good, I do believe there's one big bearish point behind ARM, and that is its valuation. Even though the stock has dropped down from that 140, 150, and now sitting at almost $88, I still believe the stock is a little bit overvalued. So we can look at forward PE ratio, which is the next 12 months. PE is roughly 57. Forward 1 year is 43.8. So obviously, I believe ARM will beat expectations, and I do believe they might beat their earnings expectations. So these values, since they're based on expectations, I believe are actually lower right now. But even if they're much lower, I don't think they're anywhere near like that 35 value right now. So for me, the only main thing for me in forms of ARM holdings is, Jose, I think this stock is way too overvalued for me to start a position. So I think I would be looking more if this forward 1 year PE ratio was roughly 35. So I believe that's probably closer to the $60 price point, especially since we're seeing these huge advancements in cloud computing right now and kind of the data centers and all these big tech players kind of creating their own CPUs. And we're seeing the evolution of autonomous driving, and we're seeing the evolution of AI hitting all types of market. So we're going to see an increase of chips. Unfortunately, again, like I mentioned, I believe the stock is overvalued. That doesn't mean the stock is not going to go up, right? If you are a shareholder of ARM and you have your own thesis, that's great, right? Everybody should have their own thesis. But for me, the risk to reward valuation is not there for me. So like I mentioned, for me, the only bearish thesis for this company in the long term of things is valuations. There's obviously a lot of other things that maybe some might think about in the short term of things that can make the stock very volatile, right? We do know that the lockup period is done for ARM, so insiders can start to be selling this company at rapid pace, and that can obviously affect the stock, but that would be more of short-term pain. In the short term, I believe the market always gives us a lot of opportunities. In the long term, I believe right now the only risk for my investment style is the valuation. So let me know in the comments below. Are you an ARM shareholder? When did you buy? Do you think this is a great time to buy? What do you think future expectations are for this company? Like I mentioned, a lot of good here, but unfortunately, it didn't meet my valuation. But I have other stocks that luckily can kind of mimic or kind of go in that same direction of ARM holdings. So take care, have a good day, and see you next time.